Microsoft stock. MSFT is the ticker symbol. It's been pushed about as high as it possibly could. Yields are disproportionate to the benchmark investment grade. What happens next? For me, for my analysis, I always start with the question, what's going on with the economy? The rate of growth of the economy is likely to slow its pace. Doesn't mean it's going to necessarily contract into a recession, but the pace of growth for the economy is likely to slow down. When you take a look at MSFT, the stock itself, it's been pushed up as high as it could be given its yield based on its rate of growth. But if we see that yield decline, the rate of growth, MSFT stock is likely to fall. It isn't necessarily saying that MSFT stock is tripping and falling, that they're not going to get as much revenue gains or anything like that, as much as the yield is too high or too low relative to investment grade benchmarks. Given that, MSFT stock, I love it as a value investment. It is way overpriced. Let's jump in and I'll show you what it is I'm looking at and why I think that MSFT does come down along with a slowing potential U.S. economy. Let's jump in. First off, I've taken a couple weeks off, about 18 days off. I had some personal things I needed to take care of. I also wanted to do some shifting with my website. For those of you who have been following me for any period of time, I am shutting down the website. I am shifting everything to Substack. I'm just done with the headache of running my own website, plus my other channel. I'm done with that simply because YouTube is done with my content. Enough said. Given that, there is a link down below to my Substack page. If you want the free email newsletter, certainly by all means click on that. Let's jump into MSFT stock, and as you can see, it's moved up quite a bit. It was late January. I think we got the latest financial data. Saw a pop higher. Initially, we saw a move lower on MSFT, but then we've been slowly trickling higher and higher with MSFT, but so has the broader stock market. And that's really where we can sort of start our analysis when I look at it. And I ask the question, what's going on with the economy? Rate of growth. Now, I'm not saying, and I want to stress this, I'm not saying we're looking at a recession in its eyes. What I'm saying is the rate of growth will mellow out. Because of that, all these stocks, specifically MSFT stock, that have been pushed as high as they are because of their yield is too low relative to a future with lower growth rates. MSFT stock is likely to move lower. Moving forward, here's a look at the overall picture for MSFT, and as you can see over the years, all the way back, this goes back to 2015, so about 9 years, close to 10 years time. It's a one-way trip up. We, of course, did see everything move lower in 2020. But moving forward, given where we are right now, as a value investor, I'm always looking for the best possible value, and I'm going to compare MSFT to the U.S. 10-year Treasury yield because that's the benchmark. And here's the thing with the U.S. 10-year Treasury yield. It's currently about 4.3%. MSFT stock, given the next 4 quarters, you're looking at sub 3% yield. Sub 3%, 4.3%. I'll take the 4.3% all day long, but here's the thing. If you actually bought treasuries, the Federal Reserve is more likely to lower interest rates over the course of a period of time, say 3, 6, 9 months. Because of that, the treasuries that you're buying will appreciate in value. So you're basically looking at the U.S. 10-year Treasury, which would be yielding about 4.3%. You'll probably see a swing in the price of treasuries, which could get you 5 to 7.5 to 10%. So on a risk-reward ratio, MSFT stock is skewed towards more risk versus the 10-year Treasury being more reward. And as a value investor or someone who's savvy and trades these things a lot, you're probably more inclined to look for the higher reward versus risk. Given that quarterly revenue numbers on MSFT, of course, we saw a solid performance for the quarter in Q2 for 2024. projected revenues. Now, Microsoft themselves, they don't exactly line up with the calendar year. 2024 is looking at 244.5 billion. 2025, you're looking at 279. I think for the next 4 quarters, you're looking at 260 billion in revenue. Net margins, a solid 35 to 37.5%. Call it a solid 35 if you look straight line across the board. The S&P 500, you're looking at about 11%. So this is 3 times higher in net margins. This is one of the reasons why MSFT stock gets chased as much as it is. It outperforms on revenue growth and net margins significantly beyond the broader stock market. I think I saw the future earnings revenue is going to be about a 15% gain for MSFT versus the broader stock market. You're looking at about 10% revenue gains on the stocks that are profitable. Now, there are some that are unprofitable within the 500, and that brings annual revenue growth could be as low as 5% depending on the company. Moving further forward, 1166 is what they're looking for 2024, the entire print for the year. They've already printed 2 quarters. So what I'm looking at is the next 4 quarters, $12.17. The price I looked at this morning, 420.55. Your yield, 2.894%. If we see the economy start to slow down, still expanding, but slow down with its rate of growth, this yield, MSFT yield itself, people are going to hit that sell button. It isn't that Microsoft is going to all of a sudden start underperforming revenue or earnings. It's the yield is too high, plain and simple. That investors are going to sit there and say, where's the safest place to park my money right now? That, of course, would be Treasuries, which you're getting 4.3%. Solid 1.5%, point and a half higher, full basis and a half higher on the U.S. 10-year Treasury versus MSFT. This is really the differential. It's kind of what you're looking at. But for me, my analysis, the way I look at it, I always ask that simple question, what's going on with the first consumers, personal income, and then expenditures? We're still below on those categories. We're still below the median. But I don't see any real impetus for those numbers to drive higher. We're at 3.7% unemployment. This is basically a full, robust economy. We can't really go much higher on a rate of growth basis. If we did, the Federal Reserve would step in and raise interest rates. Otherwise, what I see happening is that rate of growth declines somewhat. The Federal Reserve then sees its inflation target numbers in its sights, and because of that, that will give them the ability to lower interest rates that could juice the economy further. But at this point, without any real push from the consumers with gains in income and then gains from expenditures, revenues, which are driven by expenditures by consumers, just won't be there. MSFT stock, I look as you'd want to take a protective position. I don't have a position on MSFT stock. I would be more inclined to sell calls and buy puts 2, 3, 6 months out. That we'll probably see a solid move lower in MSFT, and that if you did step in selling calls, buying puts, given the economy, given what yield you're getting from MSFT, very likely you could be profitable on that one. This is one that I'm kind of looking at. I like Microsoft a lot. I'm not really one to just jump in and go short, but I think this economy is going to start slowing down. Instead of maybe MSFT itself going on a short position with a risk reversal, selling calls, buying puts, I'm likely to do that with the S&P 500 or SPY stock. Regardless, MSFT stock, when you look at the Magnificent 7, it's 24% of the entire SPY stock. So I would effectively be doing that. Nonetheless, make sure to hit the Substack link down below. Get the free email newsletter. There's also the premium version as well. Like and follow if you're just finding my channel for the first time. Thanks so much. See you in the next video.